Byron, thanks so much for joining us today. Let's get straight into a look at the markets. Of course, all attention was on the ECB today, not so much the interest rates decision that was announced, because that's pretty much a non-event and expected by the markets to a large extent. The commentary that came through from Draghi straight after.
Exactly, because the last meeting was when Draghi made all those very big statements saying that the euro was not going to end and he would do anything in his power to keep the union together. So this meeting was all about some more clarity about the process and how they're going to go about doing things. I guess now that they've put out the system to the countries, and Spain is the one who they're looking for to take the stimulus first, or take the bond buying program. So we just got to wait and see whether Spain are willing to.
It is inevitable, though. I mean, in most quarters, we've got that kind of rhetoric doing the rounds that Spain would have to come to the asking.
But there's so much political play involved. The Spanish government have their citizens to worry about. There's massive strikes going on there. The people there obviously don't want the austerity measures. Then there's the issues within the Spanish government and the Catalan government and so on. So, it's extremely dynamic. Europe is very dynamic, and there's so many different cultures. So trying to keep everyone happy is very difficult.
Certainly what the central banks worldwide are doing is trying to keep everybody happy, and that by pushing in more stimulus into the system. We've seen what the hope of more stimulus has done to that gold price today. That psychological level of $1,800 an ounce, very much in sight right now.
Yes, exactly. And it's all about confidence, at this stage. Now we know that the ECB is willing to back any country that calls out for help. And that'll give confidence, that'll give the bond markets confidence. Since the last meeting, it has done exactly that. Bond yields have come down, and it gives these countries just some more time, the time that they need to recover. Draghi mentioned that the recovery is going to start coming slowly, and we might see signs of it next year. You don't realize that this recession has been taking place for about 4 years now in Europe. So these countries do need time. Austerity measures are being implemented. A lot of the reforms are for the positive of the economies. It's just whether the citizens are happy to take a cut.
Yeah.
But to be honest, if I were a poor person, I'd rather be a poor person in Spain than a poor person in Africa.
What about all the ifs that are in the air, and what that spells for asset allocation when it comes to gold, and just how much of a portfolio it should make up? We were chatting to Kimon Voyaziers of Trident a little earlier today on Power Lunch, and he was saying that gold in your portfolio is like having insurance on the road.
Yeah, we fall in the Warren Buffett thinking pool. We don't buy into gold at all. I don't understand the fundamentals. I don't understand how people can say that it's a store of value. I understand the 60% use of it for jewelry and a few industrial uses, but the fact that people hedge it against inflation and so on, I don't want to put my hard-earned money into that kind of thing.
Mm-hmm.
Warren Buffett says that if you took all the gold in the world, you could buy all the farmland in the USA, and that reaps dividends and an actual yield. So we stay away from the commodity, and even more so the gold miners, because I'm sure you've seen that the gold mining index has been comfortably outperformed by the gold price, and you can see exactly why now. These kind of strikes really do highlight how tough the conditions are for mining in South Africa.
All that you've said now, how does it translate over to the platinum sector? Because we've got the platinum miners plagued by the same woes that the gold miners are in terms of strike action, but then again you see the industrial use for the metal.
Yeah, funnily enough, about a year and a half ago, we were still quite heavily invested in Parler. And, because the metal has an industrial use, and we saw demand for the metal picking up as car sales picked up globally, and that was the best way to benefit from that. But unfortunately, we saw these kind of labor unrest as a big negative, big electricity tariffs. I mean, we didn't realize that it was going to be to such a big extent, but we started selling last year and getting out of South African mining completely. I know we're probably going to touch on this a bit later, talking about Kumba iron ore.
Yeah.
That's a big worry, because At the end of last year, Kumba paid out 2.3 billion rand to workers in extra incentives to about 5,000 workers, and now they're still striking. And we've got 300 employers stopping 17,000 employees going to work, and that's an industry that's been doing well. There's big issues.
So where things are depressed on the mining sector front, and people saying there's value to be found, but they're just not daring enough to be delving in just yet. What's your view on the retailers? Because with there seeming to be no option, you've got the retailers still moving ahead, and then you've got the likes of a Mr. Price putting on the table a trading statement that's showing earnings up, close to 20%, expected to be up to 20% higher, so proving themselves time and time again.
Yeah, the trading statement said anything above 20%. It was quite broad, so I'm quite surprised that the share's down today. But I'm still positive on the retailers. I think the South African consumer is still quite strong. I know, looking at it in a negative way, but a lot of these wage increases are going to be positives for the retailers in the short run. Mm-hmm. But in general, this is terrible news for the economy, and the rand strength weakening is not good either, because obviously inflation affects the poor a lot more than anyone else. Yeah. So that makes consumer spend and consumer discretion decreasing. So I'm still positive on the South African consumer and on the retailers, but there are definitely some issues. But my long-term view is, we're a very resilient nation, and we have had very negative patches since democracy, and I think this will blow past, and hopefully the long-term effect isn't as bad.
Byron, always a pleasure. Thanks so much for your time today. Byron Lotter is Portfolio Manager at Vestact.